Ladies and gentlemen, a very good afternoon. On behalf of my colleagues at the Bank of Merrill Lynch, I'd like to welcome you to the Thai Focus 2014. Thank you for joining us today and this afternoon and for the rest of the next 3 days. I also like to take this opportunity to extend our gratitude to Patra Securities and Stock Exchange of Thailand, who are partners for this event once again. So far this morning, you have already heard from 3 of the leading policymakers in Thailand on the opportunities arising out of the country's ongoing development. I hope you have found the program so far insightful and constructive. There's a lot more on the agenda set for this afternoon and tomorrow. There's no doubt that the Thailand focus is firmly entrenched as one of the most prominent economic forums in the Southeast Asia for investors, institutions, and advisors. For this conference alone, more than 900 attendees are here, with 120 leading corporates participating in the conference too. As you would have heard, the story of Thailand continues to evolve and generate substantial interest. As the kingdom transitions towards a new government, the international investor community has shown considerable faith in the long-term sustainability of the economy and the opportunities available in Thailand. This forum also comes at an opportune time for the Thai economy and the Thai market. Recent fund inflows data illustrates that the international investor interest has returned in a significant way. In July alone, portfolio flows into Thailand top out at more than $1.2 billion. Another encouraging sign is Thailand's continued ability to attract direct investment. Again, flows have rebounded strongly following the uncertainty of the first half, highlighting the resilience of the international investors' interests in this market. Thailand's position at the forefront of a more prominent and more confident ASEAN bloc is a structural advantage and plays to the larger regional thematics, specifically the growth of ASEAN as a driver within the Asia-Pacific region. According to our research at Bank of America Merrill Lynch, FDI into the ASEAN 5, which includes Thailand, outpaced flows into China for the first time in 2013. Supported by Thailand, this trend continues to hold strong during the first half of 2014, and the FDI gap between ASEAN and China is widening. That said, the positive outlook does come with some concerns. Like many developing economies, Thailand faces headwinds over the short and longer term. Ongoing concerns over political stability, sluggish domestic demand, and population demographics all loom on the horizon. How the government policymakers manage these challenges will be closely watched and key to continued growth in the country. As these issues highlight, global investors must be much more cognizant of global macroeconomic and geopolitical issues when considering investment opportunities. While global liquidity is expected to remain abundant for the foreseeable future, investors need to remain vigilant for any changes in correlations, liquidity events, and external shocks that could impact portfolio investments. For us at the Bank of America Merrill Lynch, the purpose of hosting events such as this is to pass on our understanding of the complexity of investing across financial markets and using our global reach and expertise to help you and your organizations make informed investment decisions in Thailand, Southeast Asia, and beyond. At this point, let me introduce our next speaker. He is chairman of the Executive Committee of Siam Commercial Bank, Thailand's largest financial institution and the oldest bank in Thailand. During a distinguished career, he also served as a member of the Royal Thai Government as Minister of Transport and Communication. Ladies and gentlemen, please join me in welcoming Dr. Vichit Suraphongchai.
I'm not a techie man, so let me first fix what it's going to do with this. Oh, okay. Good afternoon, distinguished guests, ladies and gentlemen. First of all, I would like to thank Stock Exchange of Thailand, Patra Securities, America, Merrill, Lynch for inviting me here today. Thank you very much. It's my pleasure to share with you my perspective and my thoughts on the direction of Thailand's growth pattern or growth potential and the role of banking industry in supporting it. In modern times, the economy and banks have always shared an incredibly intervened relationship through good times as well as bad times. Therefore, to understand the evolving partnership, I would like to take a look back at the evolution of the Thai economy in the recent past. It is important to understand how the Thai economy has transformed itself over time and how the Thai banking industry has walked along side by side. Only then we can identify our strengths and tackle challenges that are coming up ahead together. I will first look at the economy pre and post-1997 crisis to see the transformation from an investment-led economy to an export-led economy and to where we are today. I will then share with you my thoughts on the way forward for the economy, highlighting our strengths, opportunities, as well as discuss several weaknesses we must overcome together as a country. Along the way, I will point out the evolving roles of the banking system. Finally, I will conclude with what I see as the banking system role in making sure that Thailand is moving forward in a sustainable manner. Well, first, let's talk about what happened in the past 30 years. From the mid-1980s to 1996, investment in physical capital was the main growth engine for the Thai economy. During this period, Thailand shifted away from agricultural sector to a more industrialized sector, mainly for industrialized goods export, in the hope to follow the successful Japanese model. To quote some number here, private investment was growing at the average rate of 4% per year during the 1980 to 1986, before accelerating to 15% per year for the 10 years period between 1987 to 1996. This was a major catalyst for GDP growth to jump on an average 5% to 10% in a period of about 20 years. During that period, the demand for investment was so high, and there was not enough domestic saving to finance it. So Thailand was relying on external source of, technology. Demand for investment was so high that there was not enough domestic saving to finance it, so Thailand relied on external sources that funds to finance the persistent current account deficit. FDI, however, was at the time a small fraction, so there was a lot of need for external borrowing. What did the economy want from the banking system then? Clearly, it was business lending. Banking system was supporting the growth pattern as lenders by challenging most of the fund towards business lending, and by finding external funding sources once permitted by the regulator in 1993, business loan grew roughly, business lending account for roughly 90% of the banking total lending, while consumer lending account for only 10% of the total loan in the 1980s. Bank lending was, of course, instrumental in the development of the export sector, with Thailand emerging as a manufacturing hub. A lot of funding was needed to support local producers. I think I skip a bit fast just to show you, never mind. This is, appears there just to show you about the private investment portion in the pre-1997. And the next graph here is to show you that the saving investment, there is not enough saving. Okay, so I'm talking about at the bank lending was instrumental in the development of the export sector. For example, automotive sector in those days, with export were growing at 33% per year. And the lending to this sector also was growing at 33% as well. So you can see that, the bank has been providing that financing to support or to promote the export sector in a big way. And much of the lending also has gone into funding new establishment of factories, as well as imports of machinery that we are growing at that time at the rate of 19% per year, which is, you can see that we were growing, the GDP was in the double digit, booming. Well, it's booming, yes, all right, but bank lending also fueled domestic asset bubble. With the government and the Bank of Thailand at that time create expectations among financial institutions of a safety net from bank failures. Banks and other financial institutions did not pay enough attention to credit risk management. With apparent currency mismatches of the economy, the banking system was not well prepared for a shock. The Bank of Thailand maintained monetary policy independence, free capital flow, and keep the exchange rate fixed, which violated the impossible trinity. So with inadequate foreign exchange reserve, the baht was under speculative attacks that led to the financial crisis in 1997. So we were hit badly then. So what happened after the 1997? We look at the period of 1998 to 2001. Domestic demand collapsed. 1998 was the worst year for investment. Private investment dropped 52%, and public investment dropped 29% from a year earlier. While private investment began to recover slowly in 1999, public investment continued to decline for another 5 years. The country turned to net savers. With little investment demand, the country becomes net savers. This was reflected in the current account, which turned from deficit to surplus. Over time, the current account surpluses earned Thailand foreign currency to pay off the legacy short-term external debt and build up the country's foreign exchange reserve. From nearly depleted Thailand foreign exchange reserve to short-term debt rebounded to the highest level by the year 2000. The banking system was in no shape to help the economy. It was going through a cleanup period. I remember quite well, this period, 1998 to 2001. The banking system gross NPL ratio was 50% in 1998, forcing all the banks scrambling for capitals. And during this period, banks were in no capacity nor appetite to take on additional risk. Banking system lending contract every year from 1998 to 2001 at the rate of 8% per year. So 2001 was a really tough year. And that's when I joined the bank, joined the Siam Commercial Bank. Luckily, I joined after 2001. Well, what happened to 2000 beyond after 2001? 2002 to 2007 is a very interesting period. Export came back strongly. Export in US dollar term was growing at about 16% per year during that 5 years period of 2002 to 2007. The growth was well balanced, with export of agriculture and manufactured goods both growing at around 16% per year. Export growth was strong and stable thanks to the solid global economy, which expanded at 4.5% per year. At the same time, in those days, we have cheap Thai baht because we just depreciate by almost 50%, abundant young and cheap labor, and relatively good infrastructure. All these factors have attracted a huge amount of FDI from multinational companies. Money pouring to Thailand from FNCs caused the FDI flow to grow as much as 22% during that 5 years. Because of that FDI, because of export receipt, the domestic economy was gaining back strength. Consumption spending grew at the average rate of 5%, and private investment grew at the average of 10%. So the GDP has bounced back. The GDP at that time was growing at 5.6%, which was a very respectable number. So what did the economy want from the banking system then? Again, with capital, liquidity, and risk management revamped after the crisis, the banking industry was ready to actively support the business. Notably, the capital adequacy ratio of the banks system was built up from around 10% in 1997 to 15% in 2007. The ratio of provision to NPL also has been growing up, has been built up from 30% to 90% in 2007. So the banking system have regained a healthy position. At the same time, the pattern of lending has changed. Used to be lending 90% to businesses. By the time of between 2002 and 2007, lending to business only grew at 3% per year, while consumer lending was growing at 19% per year. So you can see that we are shifting now. We are from the investment-led economy more to consumption, to export-led, and then to consumption. And after 1997, the baht was no longer fixed. So with flexible exchange rate, the export-led economy also required new financial service, i.e. FX hedging. So according to the Bank of Thailand, hedging ratio of Thai businesses grew from under 15% in 1998 to 30% in 2007. Okay, then we move beyond 2007. So I'd like to look at the period of the 2008-2013. This is the so-called the bumpy growth period. You can see this is the GDP growth during the period. You have a deep shape, a V shape, and whatever shape you have is very bumpy. This period, after the coup d'etat in 2006, has been marked by internal political instability with multiple street demonstrations, that also including the airport shutdown in 2008, a government crackdown in 2010, and a recent shutdown in Bangkok in 2013. In addition, there were several shocks to export, including the US financial crisis, the Eurozone sovereign debt crisis, and the major flood at home. As a result, growth has become very bumpy, which is, you can see, it was not smooth at all. And the export-led economy, which used to be the star performer, also has lost its luster. The number in 2012 was very clear that our export has suffered. There were several problems, why export suffer. I think both internal and external. I think first, external, there's weaknesses in the advanced economies. The world in general was not growing at the rate it used to be. But internally, Thailand's key export products had been less relevant to today's technological frontier. Out-of-date technology products like PC laptop, supply chain like floppy disk or hard disk drives or electronic. These are all sort of, industry that is become less and less relevant. And yet they account for up to 7% of Thai export. So having low margin to begin with, I think some of the exporters have been experiencing a very harsh operating environment. What happened to the banking system? During this uneven growth period, the banking system played an important role in maintaining stability. Due to the reforms made in the aftermath of the 1997 crisis, those efforts had shaped the strength and the resilience of the Thai banking industry. At the time when the global financial system was facing serious threats. I think the banking system at the time was important in the implementation of the policy to boost domestic consumption spending. You can see that the portion of consumer lending during that period has increased from 27 has increased further to 27 from 23% in that 5 years. So banking industry again shifting from business lending into more consumer lending. On top of that, the banking system also responds to the need for a wide range of financial services. Banks are not just lenders anymore. They respond to the need for a wide range of financial services such as investment banking, international trade financing, foreign currency transaction, and insurance services. So in short, banks' business model have become a universal banking model. So that briefly sort of summarize the historical growth pattern and the role of banks in that period from 1980s to up to now. Next, I'd like to talk about the way forward. I think we start with the core strengths of the Thai economy. I can think of three aspects. I think the first one, these are the sort of the good news. The first one is that Thailand has a strong macroeconomic stability. In recent years, Thailand has enjoyed a low inflation and a stable exchange rate, attributed to the effective monetary policies by the Bank of Thailand. Financial stability is also a major positive characteristic of Thailand, evident by the relatively immunity to the global financial crisis in 2008 and the ability to absorb large domestic shocks such as the flood and the political unrest. The second core strength for Thailand is that Thailand possesses a rare geopolitical positioning in the global stage amidst the escalating international tension, both in Europe and in South China Sea. We have been able to maintain good diplomatic ties with Japan, China, and the West. And the third one, I think is obvious to everyone, is that Thailand is located strategically in the middle of the region. The question now is how are we going to add leverage on our strength? Internally, I think the policymakers have made the right decision to move forward with the infrastructure investment, which will only be the domestic source of, not only be a domestic source of growth, but in the next several years, but also solidify Thailand's foundation for future growth. Externally, we must seize the opportunity in the high potential regional economic cooperation, such as AEC, and AEC stands for ASEAN Economic Community, and GMS, which stands for Greater Mekong sub-region. I'd like to elaborate a little bit further on the investment in infrastructure. It's very clear that the government will embark on a long-term infrastructure investment with initial estimate value of around 3 trillion baht, or close to 30% of the country's GDP. This includes all modes of transportation, railways, roadways, waterways, airports. We have investment earmarked for water management as well. In addition, there will be investment in telecommunication networks, power and utility from both public and private sectors. With the government investment crowding in the private sector interest in investment, I think we can expect positive benefits to growth. In this regard, I think public-private partnership will play a larger role and will be crucial going forward. When I talk about public-private partnership, banks will be a very important party to this cooperation. But at the same time, banks will have to be agile, quick, ready, and both capital and human stock in order to provide the right service and facilitate the economy financial need along the new growth path. Another growth area I think is very important is the potential of the regional economic cooperations. The AEC or the GMS, the Greater Mekong sub-region, provide a vastly expanded market size. Thailand is a market of around 60 million people. AEC is around 600 million people, and GMS is around 330 million people. This large pool of population benefit both as a potential customer and potential labor workers. There is another aspect for potential growth is connectivity. I think connectivity is right at the top of the development effort in the GMS. In the regional investment framework for 2013 to 2022, endorsed by the GMS Ministerial Conference in December 2013, said that 86% of the $51 billion will be for transportation. So this potential represents clear opportunity for Thailand to capitalize. For businesses, this opportunity to expand in the next 5 years, I think it will go beyond the borders of Thailand. I think we have, although we do have Thai corporation already doing cross-border business, but I think we need to do more. For banks, Thai banks have the opportunity to serve the business going into the region in many ways. In addition to the ongoing financial service like lending, FX transaction, trade financing, banks can help also provide insights. I think this is very important because for firm or corporation going into another country, you need to know the local knowledge. You need to have some local knowledge. You need to know the insight of how to do business in the country. And banks with the economy of scale, I think, and with the bankers on the ground, banks could provide valuable insight to businesses. Also, bank can act as a business partner besides just giving insight, but bank provide active advisory role in these countries, particularly around in the AEC or in the GMS. Advisory in the sense that we have helping firms making important decisions like M&A, the right company structure, and the right product to offer. So I think, and Thai banks here, with the adequacy ratio very high, and with the business model widened into cover all aspects, Thai banks are in the position ready to move, do business in the cross-border. And also, the opportunity is not limited only to businesses, but also to banks, Thai banks as well. I think today Thai banks are, moving to open branches, doing JV, a bank, or even open rep office in our neighboring countries, seeing the potential that banks can do also business with the local parties in that country. Well, this is a section I call Economy at the Structural Crossroad. I think I mentioned the strength and opportunities just now. But I think at the same time, we must recognize that the country has weaknesses that have already impeded growth today and will continue to impede growth in the future if they are not properly addressed. In other words, we are at a crossroad structurally. The first topic, the first I want to mention, I believe that this morning Governor Prasan also has touched on this, is Thailand has slipped in terms of competitiveness. It is not just a matter of growth prospect. I think our attractiveness in many aspects has been declining. Our poor showing in the rankings of the Global Competitiveness Report published by the World Economic Forum is discouraging. In the 2013 report, Thailand ranked 78th in terms of the institutional environment, a significant decline from the rank of 40th in 2007. In infrastructure, Thailand was 47 in 2013, down from 38 in 2007. In technological readiness, the country rank fell to 78th from 48th in a matter of 4 years. Thailand has also slipped in terms of productivity. I think they're related, productivity and competitiveness, but I'd like to highlight both. I mean, we look at the Thai workers' productivity today. It takes 1.8 hours for a Thai worker to produce the same amount of GDP when a Malaysian can produce in only 1 hour. This number increased to 5 times when compared to a Japanese or a Singaporean, and 8 times compared to an American. There are many causes of this. The root causes for the competitiveness or productivity declining. One factor is the lack of investment. This is expenditure on R&D by countries. You can see China is 1.4%, and you can see Thailand is about 0.3%. We are even very low. So I think we are really lagging behind in terms of investment in R&D, which is a cornerstone for productivity and for competitiveness. If we don't invest in R&D, we will be doing badly in terms of competitiveness and productivity. On top of that, the country will no longer get an economic boost from having a young workforce. This is so-called the demographic dividend. The share working age population between 15 to 59 reached its peak of 68% in 2010 and has declined steadily since that time. The contribution to economic growth from demographics will be almost zero during the next 5 years. This grim implication of low competitiveness, stagnant productivity, and aging workforce, and high household debt is that Thailand could well be facing a new and diminishing economic reality. Our new normal is likely going to be an annual GDP growth of around 4%. What must be done? I think to fully realize Thailand's growth potential, the country needs to get serious at addressing the declines in competitiveness and productivity. To become competitive, you need a teamwork. You need all the stakeholders to have to play their roles to address the problem in higher education, in innovation, in technological readiness, and other factors. I'd like to just mention a few aspects that the role of each stakeholder can play. Let's start with the government. The government has to play a leading role in steering the country towards this competitiveness. The planned 2 and 3 trillion baht investment in connectivity infrastructure is a place to start. The benefit from logistic cost will boost the Thailand competitiveness as as the center for the region. But at the same time, public policy need to address deficit in other areas like R&D, quality of education, and institutional quality. To encourage business to invest in productivity, a clear goal of what needs to be achieved as a country must be set. Just look at the agency like BOI now, Board of Investment. I think it should be very clear that the targeting, what target for promotion, the BOI should have very clear policy on this. Incentive should be channeled to not just big industries, but high value added ones. I think BOI can play a bigger role in arranging for a monitoring plan to ensure that there is a technology transfer. But these are the roles that I think the government can play actively. On the business, I think businesses need to move forward towards high technology, towards high value added industry. The world is certainly moving in that direction, building things faster, better, with the help of machinery, technology, and last but not least, digitization. Thailand, we have to move in that direction. I think regardless of the nature of the business, productivity can also be harvested with modern technology that increase the ability to process a vast amount of information. I'm talking about big data. The world is changing at a faster rate than ever before. Businesses have to adapt to make fast decisions, utilizing data analytics as a tool. To deal with this ever-changing world, businesses need to be agile, flexible, and very, very well informed. So investment in data and data analytics is something that businesses must seriously pursue to boost their own productivities. So we come to the last stakeholders that I can think of is banks. I think as lenders, we can help in terms the country to focus on investment. Because investment needs funding, so banks are there, to provide that financing. Again, like I mentioned, today Thai banks' capital ratio is very healthy. So we have the capacity and the appetite to provide support investment to boost productivity. Companies today, I think they require not only just to increase production scale, but I think to upgrade outdated machineries. Again, the focus is productivity. In the long run, if we don't have productivity, I don't think we have a long-run prospect. So banks must be ready to provide support for companies that invest in terms of upgrading the machinery, upgrading the technology, not going and buy the same old machine again. I think we need to focus on banks need to focus on this area. Banks also need to using the technology, like which banks are doing right now, many banks are doing right now, is to upgrade their own system. That today we have a better payment system, a better transfer system, a better information system. That also can be leveraged and helping the customers to also upgrade that system as well. At the end, this will save cost and improve the productivity. So I think we have many things that we need to do to get out from this trap, the middle income trap that that we are losing competitiveness on that. This is, I think, the message I'd like to pass on to all the stakeholders, that this is Thailand as a crossroad. We cannot rely on the same business model. We cannot rely on the same policy. We have to look around, and we have to improve. So I think to summarize my presentation today is that we all have work to do, and given the technological advances, we have to invest in R&D a lot more, particularly on information technology, on analytics. The amount of information now, there's so much information being generated. In fact, all the data today, in the last 2 years, we generate 90% of the data that, from the beginning of the world is sort of, every year we almost triple the information, or even there's so much data. And those who can exploit those data will become a winner. You look around, you look at Google, so successful, because they are very good at information. You look at Facebook, all the big players today put a lot of focus and money on data, on big data, on intelligence, on analytics. Someone said that, the best career going forward is statisticians. Those who can analyze data has had the best prospect for the career. Accountants may not be very excited because that job might be replaced by technology. So I just conclude my presentation today, and thank you very much for listening. Thank you.